Hey everybody, welcome. And we're here to talk about how to grow the stablecoin industry. Stablecoin's been an amazing use case across crypto since inception. It's really driven adoption across exchanges between centralized exchanges, adding into DeFi, and now with 12.5 billion on Solana, we've got some of the top experts and leading innovators who are going to share some insight. And so to kick it off, maybe each one of you just give us a quick snapshot, the Twitterverse of what you're doing and the protocol that you're working on and what you feel is a bit of a differentiator in your protocol. Maybe we start at the end and come this way.
Yeah, sure, I'll start. So I'm currently a partner at Tax8 Ventures. We're an early stage investor and incubator. Mostly nowadays investing in PayFi, tokenization, and RWA projects. I've been working on stablecoins since 2018. First started as a Canadian dollar builder with Bank of Montreal, then moved to Stellar to manage a stablecoin network, then Circle on the issuer side, and now I'm finally on the investing side. So I think I did the full circle of the stablecoin.
So from builder to VC to investor and accelerator.
But still builder at heart.
Still builder at heart. Yeah. Okay, that's cool. How about you, Nick?
I'm Nick, the CEO and co-founder of Agora. We're a stablecoin issuer and infrastructure platform. So I first got into the space in 2016 and then got sucked back in around DeFi summer when there were finally real sort of applications across financial services and payments that I wanted to use, and was looking at the market, and there was this duopoly cartel of issuers that didn't really, I would say, partner with the rest of the crypto economy. And so you obviously have Tether and then Circle, which has really one partner in Coinbase. And so what we wanted to do is build an issuer that was a true fiat coin partner to everyone else. Right? I really viewed the rent that they were seeking out of crypto as a problem that was worse than what was going on in the banking industry. And so what we do is work with folks, to basically deliver the float income back to their business, which they can then push on to their users or use however they'd like and sort of give them control. In addition to that, we want to reduce costs across the stack. So we're building into the infrastructure layer and trying to bring on and off ramp fees to zero as opposed to continuing to increase them. So that's us.
Thanks. Sam?
Sure, thank you. My name's Sam. I'm COO and part of the founding team at KAST. At KAST, we're essentially building a global bank powered by stablecoins, offering our services to over upwards of 150 countries. Prior to that, I was based in Australia and I focused on a form of OTC trading using stablecoins to cross-border for remittance companies. So that's what I did for about 4 or 5 years prior to joining KAST. KAST, as of right now, we're looking to bridge that gap between, for all the individuals who want to pay for goods and services around the world. They want to make payments to a family member in another country. The current banking system wasn't really allowing them to do that in the right format. A lot of friction. So, enter KAST, we're essentially building a way for individuals to bypass that poor user experience and, spend their stable coins, send their stable coins. Move freely.
Nice. And you, Erbil, here we go.
Yes, my name is Erbil. I'm co-founder of Huma Finance. We are the first PayFi network. We accelerate global payments by using stablecoin liquidity in DeFi. We return all of the money made from these settlement transactions in the form of yield back into the ecosystem. We just launched Huma 2.0 about 2 weeks ago on Solana. There has been a massive success. We so far surpassed $4 billion in total transaction volume. We 6x'd our user base in the last 2 weeks. And our yield right now is accessible in the form of a liquid LP token called PayFi Strategy Token. It's like a PST. You can find it on Jupiter and the rest of the Solana DeFi. And I believe it's returning one of the best USDC yields at about 10.5%. We expect that to be the case. PayFi yield to be fairly stable, double digits, never 1,000%, but also never 3-4% that you see in the bear markets. So our goal is to bring this kind of like new economy all on Solana.
Yeah. So great. I mean, we've got stable coins. we actually think that stablecoin industry is going to grow to trillions of dollars. Right now, it's a $200 billion ecosystem across the boards. Solana at the moment is only $12.5 billion, but that will grow because Tether and Circle are the big dominants, right? And here we're working on new innovations to really drive and change that. In the payment system, right, we've had two dominant players, Visa and MasterCard. And the Visa and MasterCard ecosystem are extracting a lot of value across the payment ecosystem. You have 7 different toll takers. And Jess, who was on stage, used to work at checkout. She can tell you all the toll takers on settling with credit cards and payment systems. How are you leveraging crypto and hoping stablecoins to minimize and reduce the cost of a transaction for settling and payments?
Great question. So we might be working on a pilot with Visa, so I'm gonna trash talk MasterCard for a second. So these card networks work in a very simple yet sophisticated way. When you actually swipe a card, let's say you go to a shop in Istanbul, you swipe a card. There are a lot of intermediaries get involved in that. MasterCard is basically a network that helps orchestrate what happens between these intermediaries, but they don't necessarily transfer the money from A to B. They just transfer information and orchestrate this whole thing. There is an issuer of your card, and an issuer of your card might be working with a bank that actually provides the credit for your card. But the credit doesn't necessarily pay for the goods. The credit just basically authorizes the payment of the goods into the network. And then that information is so delayed that the moment actually your bank is saying, okay, you can pay this merchant, it's already 1 day later. And then the Visa network needs to go and find the merchant's bank and then make sure the merchant bank has liquidity to distribute those payments. And that takes another day or so to get through. And then the bank needs to eventually make those funds available to the merchant, which also takes a few days, sometimes a month. So this whole thing requires so many intermediaries who capture lots of money in this process. And merchants basically are on the losing end because they need to wait so long to get their payments, but also they're losing a huge percentage point, especially if they're like a low margin business on every single sale. So with Huma, what you can do is you can just swipe the card instead of going to all these intermediaries. You can just go to the network. You can just go to blockchain and say, do I have the liquidity to pay for this in USDC? And if you do, you can just settle with the merchant right away. And this is like so much faster, so much cheaper.
So it's cheaper for the merchant. So the merchants actually make a bigger margin. And it's instant settlement versus a 30-day settlement that the merchants deal with today. So yeah, that's great. I think the other thing that we're seeing hindering growth, and we discussed not to talk about legal, by the way, so we're taking that out. If you have lawyers, you can engage them. Or you have ChatGPT these days, you can ask them for advice. But one of the biggest impediments, payments, right? We want to see people use stablecoins to actually purchase goods. So that's where Huma comes in. But banking, right? We've all heard about how difficult it is for anybody in crypto to have a bank account. If you've done anything with crypto, to get a payments account, to get a bank account is really challenging. And how does KAST going to help open up the banking system and all of the new features that the blockchain and this new infrastructure is going to be providing to everybody?
Yeah, sure. So I guess one example is, I'm based in Australia. If I want to send money to my family member living in, say, Turkey, at times this might take 2 weeks. It will move between intermediaries. Everyone takes a cut, and maybe the end user loses 8%, 6 to 8% from what I've initially sent. So what we're essentially building at KAST is a way for people to move their money from A to B instantly. So we remove that friction. We remove 2 weeks. We remove the cost, and we're essentially creating a much better user experience, factoring those two things in.
I think that's the key thing, right? I mean, anybody to try to wire money around the world, we know how costly it is and how much time it takes in a day and age where we all have the internet. Everybody's connected. We've all got mobile phones, and it still costs us money and takes time. So how do we eliminate that and leverage the fast blockchain that we have on Solana to be able to execute fast transactions and bring out the good user experience? And I think, Nick, what you're working on at a much different level, I mean, Van Eck has really embraced crypto and really built innovative new products. And with Agora now, you're really supporting that banking infrastructure as well, right? With the institutional element and around it, but also the on and off ramps, as you were talking about earlier, which is a big impediment to connect the digital realm with the physical realm. How do you see that evolving, and where do you really want to spend a lot of your attention in the next sort of 6 months?
Yeah, so we started this business, I would say, a couple quarters after the SVB incident. And something that was really important to me is you had two players at the time. One where there was an opaque view of where those assets were sitting. And then you had another that was much more transparent, but had just experienced a DPEG. And so starting with institutional grade custody was very important to me. And given Van Eck and their assets that they have across the banking system, they have about 120 billion with State Street. We were able to get bank accounts at a time with the best banks in the world, to support this stablecoin effort. And so starting there was really important. But this is like a much broader sort of challenge, right? I was talking to a decentralized stablecoin founder a few weeks ago, and he said, in his view, you're actually not really a stablecoin if you don't have a bank account, right? Because so much of this is doing cross-border flows and managing dollars in different currencies at different jurisdictions, right? And what we're focused on is building a global liquidity network, right? So that means not just liquidity for off-ramping in the United States, but also having local liquidity in Turkey and other strategic countries around the world. And so you have to work with local banks, OTC desks, and a variety of different players. We were chatting with a conglomerate yesterday, and they own one of the private banks in Turkey. And so setting up an account there so that we can operate between the lira and then our stable as well. And so it's a much broader effort, but one that we're I think trying to bring both the public ledgering and then the traditional rails and bring that together and build AUST on top of that.
And I think a lot of people don't really realize that the remittance business requires liquidity at the point of on and off ramps, right? So I can transfer on a blockchain, and if you're there, we can actually see the ledger is fully decentralized. But if I need to have off and off ramps in a local market, having that liquidity solution on the ground and actually supplying that liquidity in those markets, think about it as you have to have different pools on all the different exchanges. And actually you're doing that with a traditional opaque ledger and then a transparent ledger on the other side. And how do you provide that visibility?
Yeah, and I even say folks like Erbil, their company is a huge piece of this equation as well, because and to maybe illustrate an example, you have a company like a Felix Pago, right, where they have users in the U.S. that are sending money back to Mexico, and then they want to off ramp to local fiat. And even though they're using stablecoins, they're interacting still with a lot of the traditional system. And so you can have those delays in settlement time where it takes days, and then they might go to someone like a Huma, right, or another credit provider and say, hey, actually, over the weekend we need to take credit from you. We'll pay you 6 bips today, so they can post that as collateral and then actually make it a much more seamless experience. And so it's working with a bunch of different players sort of across the stage to solve a lot of these problems across global payments, but also just global business.
Yeah, I mean, it's a great panel, right? We've got basically a nice vertical integration opportunity here, and we've got a VC at the end that could fund a lot of these activities as well. Yeah, so RWA, right? I mean, you said you're focusing a bit more on RWA, and the stablecoin has been, or still is, an RWA use case, right? We're tokenizing the dollar in a way. How do you view from an investment, what are you looking to invest in, given we want to grow adoption of the stablecoin, not just the circulation of stablecoin, but largely the adoption and the velocity of stablecoins?
That's a great question. The biggest thing that we look is real-world impact or real-world use cases. Just to add a few things to what Nick said, this might be an unpopular view, but right now the cross-border payments based on stablecoins are heavily dependent on the first mile and last mile if we use a traditional banking. So it's basically adding another layer, another fragmented, another inefficiency. So I think right now using stablecoins for cross-border payments, if it includes double FX and different currency other than USD, doesn't make sense. It's more expensive, it's more costly, and it takes more time. But new projects like taking not just on the issuer side, but the global liquidity, that is going to change the payment space and the stable coins, I believe. If we think the US dollar and US dollar stable coins as the core of the on-chain economy, we need local access points. So that's where we are excited to explore non-US dollar stable coins. Stable coins, there's a purpose for it. I think payment is just the first piece that we're focusing, but how we see is whether we call it stable coins, pegged assets, it enables interoperability. Interoperability between different networks, different value networks, different currencies, different payment systems. Right now, I don't think, again, this might be an unpopular opinion, but we don't see anything, I don't see anything. Most of the stuff I see in the RWA is just a little gimmicky use case, just fractionalize something and sell it. We are very excited about the collateral space and more applications in the financial institution side, especially. But yeah, I think the stablecoin space is going to grow a lot when we have on-chain settlement and less reliance on the current liquidity structures.
I think, when dollars or money was first created and how the circulation grew it was creating a uniform standard that was very easy and independent of the underlying asset or technology, if you will, that would enable the circulation and the distribution of that currency. So we had it in paper form, right? It didn't care. It had paper and had a dollar value. Originally, it was backed by gold. Now it's backed by, force. But either way, it's backed, and we trust that paper. In digital dollars, in the Visa and the MasterCard space, we don't even know. It's just a number. It's a byte, or 1 and a 0, right? I mean, it's bytes. It's digital. And we don't care about the technology again. The 7 toll takers, nobody knows about it unless you're in the payments industry. And so how do we, and now currently in crypto, everybody's worried, do I have the right wallet? Am I on the right blockchain? Does this coin work on that chain? How do we abstract? In order to drive real growth, I need to have the technology layer itself, or the application, which is the stablecoin, abstracted from the actual technology complexity involved in there. How do we, as a community, drive and communicate that to the market and abstract that complexity in the ecosystem?
I believe it's already happening. So sometimes when you look at things from inside, you see one side of it. It's like this, fish in an aquarium, like, fish in a bowl situation. And when you look from the outside, you see something else. And I think that, maybe, we spend too much time looking things from inside. So we think, see things in a certain way. But when you take yourself outside, it's already happening. So, we already have KAST, right? And KAST to, somebody who's walking down the street is nothing but a card. Right? It's nothing but a card. And the way you use it is basically just like another card. And it has more benefits than another card. And it has better financials and better economics than another card. And that's the best way to actually abstract away the complexity, because you're providing something to people that doesn't require them to change their daily behavior. Because when they do, to be honest, actually, they are creating some form of financial risk for themselves. Because when my uncle and my mom wants to use our network in a native way, I tell them, don't do it. You're gonna get your wallet keys stolen, whatever. I don't want to be liable for that, right? Just use it the way that you're using right now. I don't need you to know that you're using it. Same thing with the merchants, in Indonesia, who is piloting, this Visa or MasterCard type of, instant settlement. I don't need the merchant to know, because of stablecoins, everything is settling, in real time with them. I just need them to just appreciate the fact that, with an upgrade to the infrastructure, they're suddenly getting paid in real time instead of waiting, and they're paying less commissions, right? So that's to me is where I think we have to focus more in investing. Like, there's stealing money, alternative to TransferWise. Everything is about blockchain and stablecoins behind the scenes, but on the surface, it's just like TransferWise, right? And that's, I think, the beauty of the solutions that I believe that's going to drive the the next wave of innovation.
Yeah, so I think the rails that we have underneath everything we're building are allowing for instant settlement, right? I mean, and I think that's really such a value proposition to increase the velocity of money, right? And that ledger is transparent. And the other aspect, though, that when I look a lot at money and how it works is lending and credit markets. And you were alluding to it earlier, right? Collateralization. In crypto, we have this LTV element that you don't have. You do have as well in other assets. How do we grow the credit and lending market? Is that something that we really need in this space? And will that help drive growth in the stablecoin category?
Yes, I think absolutely you need credit. Yeah. It's like I was talking to a remittance company last week who's working with the wallet as a service provider. They're looking for a stablecoin. And it actually today is, there's some benefits to using stables, but they still have challenges where they need this liquidity, right? Because they're still interacting with the banking system and sort of the existing problem set, right? And so I think for the next, 15, 20 years until everyone's just using stablecoins on blockchains, right? You're going to need credit just for that use case. But beyond that, right? It's just, if we want to bring the traditional economy on chain, you need to have credit solutions, right? And so even just beyond PayFi credit, it's traditional credit facilities need to come on chain, and I think that's starting to happen. We're trying to help push that and make that happen. I think the biggest opportunity in stablecoins right now and in credit beyond sort of PayFi is trade finance, right? And people that are either in the commodity industry or working in jurisdictions where it's also, they're sort of like real world use cases, but they're operating in industries where it's challenging to get a bank account. Or maybe they don't want to post dollars in a bank in the Congo, right? And so you can use stable coins and blockchain-based rails and also credit to help bring a lot of these traditional companies on chain. Mining companies are one that my family has a lot of experience with that we're starting to talk to as well, and trying to give them a portal and saying, hey, like you should just operate your entire business on blockchain-based rails, right? Because many of the reasons that we've all discussed as a group.
Yeah, I mean, in trade finance, and we've experienced that a lot, in the trade finance category, there are such complexities involved with actually financing with especially in the agricultural business, right? It's like, how do I fund the purchase at a wholesale level from little farmers? How do I get credit for that? Even in the fiat world, in the traditional world, it's not possible. However, in crypto, with the pools, liquidity pools, and the financial instruments that we have, it's really interesting. And stablecoins are an immediate way to actually transfer and settle, which is an amazing feat that we need to see more of and grow more of in this market. I think the other element is really user adoption. I mean, it's sort of, you're all working on different components. When you talk to merchants or you're talking to customers, how are you engaging with the merchants and the customers around giving them a value proposition to actually, you have to sign, it's a no-brainer. Why are you waiting? What's holding you back?
Yeah, sure. So I think one use case we're seeing for some of our emerging market customers is they're more than happy to hold a US dollar versus their local currency. Yeah. As an example, I just got a taxi here this morning, and it turns out I didn't have any Turkish lira, and his card machine went missing as it was pay time. So I found US dollars in my wallet and paid, and he had no problem taking it. So I think even factoring that in, that's what our customers see and feel as well. They're happy to hold US dollars. Yeah. So if we can create a super simple and easy user experience where they can hold dollars in our app, we're essentially putting a US dollar bank account in the hands of 2 billion people who historically have never been able to achieve that.
Yeah.
I can add a little bit to that. My angle is, as a user, the value that I get. The biggest value that I get from stablecoins, whether using KAST or different solutions, is the access. The access and the usability of dollar wherever you are. Not necessarily it's cheaper, sometimes it's more expensive, but the freedom to use it the way you want, the control that you have, rather than putting on financial institutions and the counter risk, basically, that's the big value. So I think the usage of the stablecoin just
So to have your own custody of the coin so that you're in control of
yeah,
it.
you're in control of it. And like Sam said, like, my background is Turkish. I lived in Canada most of my life. All my savings are in US dollar. Why? Not because I love the US government or I love the American financial system,
No.
but it's the usability and access and how I can use in different platforms or different protocols, and not just in crypto, but also in the real world.
Yeah.
And that Sam's example was a great one, as people transact with it also, even if it's not a legal tender.
Yeah, so that's really also the access, right? So you ultimately, anybody can access a currency like the US dollar that they couldn't access otherwise. The other thing that's really come about is the emergence of yield-bearing stablecoins, right? So ultimately, a lot of the stablecoins are asset-backed. The assets that are backing the stablecoins in circulation are generating a yield, and ultimately that is going to the enrichment of the certain protocol owner or the house that is distributing the coins. And the model to compete against that is to share some of that yield with the stablecoin holders. How do you find and a lot of consumers don't really understand that. They don't realize that. It's like having an interest-bearing stablecoin, savings account, sorry. So how do you see that as a value proposition that people could be looking for and could accelerate the growth of adoption in stablecoins?
Yeah, I think we have to really triangulate around a definition of stablecoins first.
Yep.
Yeah.
I really view those products as yield products.
Yep.
Right. So I try to use this as like a very simple framework. But if you think about your sort of traditional stablecoins like a USDC, USDT, AUSD, where we're like 1-to-1, versus the spectrum of yield payout products, like it's kind of like the traditional fixed income market. And I think they're very different from one another and serve very different use cases, right? Like if you want to buy a treasury, you sort of buy a treasury. If you buy a junk bond, you buy a junk bond. I think, ultimately we should probably try to just call them what they are, which are yield products. And I think that is definitely a very attractive way to get new users on chain, right? Because it's bringing, traditional products that folks are familiar with, like, corporate bonds or what have you, in sort of an on-chain format. And I think it's a really attractive way to get users on chain. Like, Huma's product is a yield product, right?
Yeah.
And so, if they wanted to just sort of dollarize it, they could call it a stable coin, but it's kind of not really. It's a yield product, right? And so I think you're going to continue to see a growth of these types of products on chain, where stable coins like even like AUSD or USDC or USDT could sort of be the PSM, right? Or the asset that goes in and out and acts like cash, right? Whereas, the backing behind it is sort of this yield generation mechanism.
Yeah, I mean,
Anything to add?
this is exactly the way we see it, and the reason why we didn't call it a yield-bearing stable coin, because when you deposit capital into the network, you're providing USD liquidity, and that powers all the payment settlements around the world, and you derive all the fees, and then that fees goes back to the user, and this could be coined in the way of a yield-bearing stable coin. We thought that would be a disservice to really defining what this is, because it's a yield-bearing LP token, right? And when you call it a stable coin, then you're kind of like misleading people to think that actually, it's actually a stable coin that tries to keep its peg to dollars, but it's not really trying to do that, right? It's basically using the dollars to do something, and that thing is very productive. That's why you have yield. But on the other hand, I actually really love this, proliferation of the yield-bearing stablecoins coming to market. Maybe they'll be called, multiple different things, because there's so much competition for all of them to call themselves yield-bearing stablecoins. It does something that was never possible in fiat. In fiat, you have to have a checking account, you have to have a savings account, you have to have an investment account. But in a world where you always have this like base inflation, where your money is always losing, regardless of you being in the US, in Turkey, in Indonesia, in Vietnam, or in China, you're fighting against this volatile currency markets, and you're fighting against inflation. A lot of time there's at least some friction to basically get the base yield.
Yep.
If your currency that you're holding, which is the best currency at this in emerging markets in terms of the best demand, is giving you this kind of a yield by default, you're not losing by holding something.
Yeah.
So I think that's what makes them really powerful, and I see them as like a new wave of like demand coming in by these things being more and more integrated into simple fintech applications and simple bank applications.
Yeah. Yeah, so I think, and what are the fintech applications that a lot of people use today as well, and having that embedded in there is going to be key. I mean, I'm going to do a bit of a plug. We launched Truflation, so we actually calculated inflation because we felt that people were not aware enough on the depreciating purchase power in a currency, right? And I think Turkey is pretty familiar with inflation. Argentina was very familiar with inflation. And so how do you feel? Do people actually worry about inflation? Do they like the dollar more? So when you come out of the taxi, when you paid him with the dollar, was he happy with the dollar? Yeah.
I think he was.
I think inflation is a part of life here.
Okay.
Obviously, it's a huge impact, but I think people are even seeing obviously there's no funny part, but it's like seeing the funny parts. The prices are increasing every 3 months, 2 months. It's just a part of life
Way
now.
of life.
It is sad to think this way, and I think people also need to be more educated in the impact of inflation or the causes of inflation, because now it's just like they see the inflation and the effect that they have is the price differences. But
Yeah, because if you look on chain, all the stable coins, I mean, 99.6 or 99.7 or 8, I mean, it's a radically high number, are all US dollar pegged, right? I mean, nobody uses a euro stablecoin. I think Tether even killed their euros. I mean, how do you, yeah.
But I mean, Tether's case was because of the MiCA regulation. I know we're not going into regulation, but that's why Tether is investing in a lot of different MiCA compatible or MiCA compliant stablecoins in Europe. I think the non-US dollar stablecoins are going to have their time, starting with the euro. Yeah, I think it's gonna come.
Yeah. Well, I think that runs out of time. Amazing panel. I hope you guys enjoyed this. It was worthwhile sitting here and listening to some of pristine experts in this industry. So thank you all. Thank you especially for sharing the insights, and hope you enjoy the rest of the couple of days here. Thank you, everybody.
Thank you.